Hello and welcome to the forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smartkarma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
Good evening and welcome to yet another Smartkarma forum. While we wait for attendees to stream in, a quick overview. The forum is a high-impact weekly live webinar. It's exclusive to Smartkarma Plus subscribers. We use the forum to discuss some of the best, highest conviction ideas and insights surfaced across the Smartkarma network. A little disclaimer, the forum is meant purely for informational purposes and does not constitute investment advice. It is the opinion not of Smartkarma, but that of our insight providers, and Chatham House rule applies. Every week, we bring some of the best, most interesting ideas to light using proprietary platform data from Smartkarma. Last week, on the 10th of Feb, we looked at plantation companies across Southeast Asia, and we discussed a thesis around owning them into earnings. We looked at Raffles Medical and a potential uplift from Singapore strategy. We also looked at Oriental Watch and increasing visibility on the second half. The week prior, we paid attention to Rex International, which is one of very few oil and gas companies that are listed on the Singapore SGX market. We looked at Water Oasis, a small cap in Hong Kong, and we paid attention to an important theme, which is Chinese real estate and M&A loans being excluded from the 3 red lines policies. In case you have missed prior forums and want to revisit them, you can head on over to the Smartkarma Plus weekly forum channel on YouTube. You can look at past forum recordings. You can also share these with your friends. So today, we're going to take a look at 3 things. AEM Holdings, which is a Singapore-listed semiconductor supply chain firm. China Unicom, which is a large cap telco in Hong Kong, and also an interesting small cap idea in the Philippines market called Keepers Holdings. During any time of the forum, if you have questions, please use the Q&A button on your Zoom application to send these through, or you can even ask them in that brief period right at the end of the presentation. AEM Holdings. For those who are unfamiliar, this is a Singapore-listed small or mid-cap company. The market cap is just over $1 billion US. It is one of the few pure tech semicon names that is listed on the SGX. This name has been covered in a lot of detail by Nicholas van Broekhoven, and we will share with you his key thesis here. So first of all, what does AEM do? AEM designs and manufactures semiconductor equipment, tooling, parts, and components, and plays a critical role within the testing part of the semiconductor value chain. The core reason to be bullish the name is it is directly exposed to Intel, and Intel has planned an aggressive ramp up in capital expenditure over the course of this year and the following years. This would make AEM a prime beneficiary of that capex. This is a reason that is not fully understood by the market yet. Management is confident that Intel is not going to be the only new partnership it strikes, but there are several other large semicon customers that it's in conversations with. More recently, Temasek took a stake in the business, which confirms good prospects. In Nicholas's opinion, management has raised its guidance for revenue substantially from 460 to 520 Sing dollars to 525 to 550. In addition, AEM is preparing for a potential NASDAQ listing, which would sit very nicely with significant new customer flow as well. In Nicholas's analysis, he thinks the share price could trade up to 8 Singapore dollars, which is substantial upside from current levels. On the right-hand side, there's an interesting graphic with an important caption. Last year, AEM held a conference call which was attended by over 76 prominent investors, including some of the most prominent institutions out there that invest in Asian markets. This shows that this name is getting a lot of attention from big holders, and so long as it executes well, we'll get a lot of support. Moving on to the next idea. This is China Unicom. The ticker is 762 Hong Kong. This is a large cap, and it trades a lot of volume. So very briefly, China Unicom is one of the 3 large telcos in the Chinese market. The share price is really bombed out. It is currently trading at an 81% discount to its net asset value. It is extremely cheap relative to its parent, China United Network, which is listed on the A-share market. It trades on less than 1 times EV/EBITDA versus peers at about 5 times. It's a net cash business with 7% dividend yield here. So this is a name where there is huge potential for capital management, be it buybacks or increase in dividends. And we think, just like what we've seen in the case of China Mobile, where the parent has announced a significant buyback, we think there could be significant levers that the parent could play to recognize value for minority investors. Moving on to the third and final idea. It's Keepers Holding. The ticker is KEEPR space PM. As implied in the subtitle there, this is a proxy for Philippines reopening. You will notice a very crazy chart here. It appears as if the share price was close to $40 and has fallen down to $1. This is a red herring because Keepers is a backdoor listing, and the listing price was only $1.50. So you're trading at a small discount to its IPO price. This historic price has nothing to do with the business today. In fact, it used to be called Da Vinci Holdings prior to that RTO, or re-IPO as it's called in the Philippines market. Okay, so what's the thesis here? So Keepers is one of the companies under the Lucio Group in Philippines. It is the largest distributor of imported spirits into the Philippines market. It is a near monopoly in that business, and pretty much all the spirits that it distributes, it has exclusivity over. Why is this an interesting market? Today, imported spirits is only about 5% of the total market of alcohol in Philippines, and it's growing extremely quickly, over 20% to even 30% annual growth for the market itself. And as mentioned, Keepers pretty much dominates that market with a 74 to 75% share. The reason Keepers enjoys such a monopolistic position is because its parent, the Lucio Group, owns Pure Gold as well as SNR. Pure Gold is the largest hypermarket chain in Philippines, and SNR is the duty-free business in Philippines. So when Keepers goes and negotiates deals with guys like Diageo, it can use this dominant distribution to get that kind of exclusivity. Company is net cash. It listed at about 9 to 10 times PE. Nearly 30% of the market cap is net cash, so we're looking at a 7 to 8 times X cash PE. It has a guaranteed 20% payout ratio, and this is a stock that can easily compound at 25 to 30%. As mentioned earlier, in the previous slide, the market cap is under $400 million US dollars. So this is really a name that can, that has a huge headroom for growth in the future. Also, you might have noticed that the Philippines market is reopening again after a year to 2 years of lockdown and shutdowns, which means there's a lot of pent-up demand, and this could be one of the best reopening plays as well. In the re-IPO, the company sold down very little stock, so there's very few sellers, and you're actually buying it at a discount to that IPO price, which is a great mark to be investing in. And with that, we're at the end of the presentation for this week's forum. We're going to wait here for a few seconds in case anyone has questions. Otherwise, you can always post them as discussions on the platform itself. Okay, we do not have any questions coming in today, so we're going to wrap it up. Thank you very much for your participation, and we'll look forward to more feedback and ideas on not just these names, but some of the previous names we've discussed at the forum. Thanks and speak soon. Bye-bye.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching and see you next week.